Every crash starts with silence, not fear, not panic, just silence. Charts look fine, headlines sound calm, everyone says, the worst is over. And then, out of nowhere, something breaks, and the market falls like gravity just doubled. That quiet moment before the fall, that's the sound of liquidity disappearing. Liquidity isn't money, it's the movement of money. It's trust, it's momentum. It's the invisible heartbeat that keeps markets alive. When liquidity moves, everything moves. When it freezes, everything dies. Slowly, quietly, and then all at once. You can't see liquidity directly. It doesn't have a ticker symbol or a logo. But you can feel it. You feel it when trades take longer to fill, when volume disappears, when the market feels heavy for no reason. That's what silence in finance really is. Money holding its breath. Think of liquidity like oxygen. You can't see it, but you die without it. When it flows, life feels normal. When it starts to thin, you get dizzy, confused, until the system just collapses. That's how every crash begins, not with a bang, but with a whisper. Look back at history. In 2008, banks didn't run out of money. They ran out of trust. Nobody wanted to lend. Cash existed. It just sat still. And that stillness broke the system. In 2020, the opposite happened. The world shut down and central banks panicked. They opened the floodgates and printed trillions. Liquidity exploded into everything. Stocks, crypto, real estate. Even sneakers and Pokemon cards went to the moon. It felt like a miracle, but it wasn't wealth. It was oxygen pumped at full pressure. And when they turned the tanks off, everyone gasped. Prices collapsed. Confidence evaporated. And the world remembered that every boom is just borrowed air. That's the real nature of liquidity traps. They don't happen when there's no money. They happen when no one's willing to move it. When fear replaces trust. When cash hides in the shadows, waiting for someone else to make the first move. And when everyone waits at once, the market freezes. You've seen it before. Volume fades. Volatility dies. People say, we're consolidating. But it's not consolidation. It's suffocation. It's the market running out of air. Liquidity traps don't begin with fear. They begin with arrogance. When people think, this time it's different. When everyone's leveraged. When cash feels useless because everything only goes up. That's when the trap is set. In 2021, that was crypto. Stimulus checks, zero interest, free liquidity. Every token pumped. Even fake projects made millionaires. People thought they were smart, but it was just flow. By 2022, when the Fed started tightening, liquidity drained out like water through a crack. Everything that looked unstoppable stopped. Prices fell 80%, and suddenly nobody wanted to buy, not because the assets changed, but because the oxygen was gone. Let me give you a picture. Imagine you're underwater with a tank of air. When it's full, you move freely, confidently. But when it starts to empty, you don't notice right away. You keep swimming, and then, all at once, you can't breathe. That's what a liquidity crash feels like. You think you're fine until you're not. Right now in 2025, the world is back in that slow, invisible phase. Liquidity isn't gone. It's hiding. Central banks are shrinking their balance sheets. The dollar is strong again. Bond yields are high. And global cash is moving into safer places. Quietly, patiently. Crypto feels it first. It always does. Because crypto is pure liquidity. It's risk with no walls. When money expands, Bitcoin breathes first. When it contracts, Bitcoin suffocates first. You can track it. Look at stablecoins. They're the crypto bloodstream. When their total supply grows, new oxygen is entering the system. When it shrinks, the lungs are collapsing. And right now, stablecoin supply has stopped growing. That's the warning nobody talks about. When stablecoins stop expanding, it means no new money is coming in. The same capital just circles around, trading between tokens, pretending to be life. It's like a bar that looks busy, but it's the same people going in and out. no new flow, no new breath. And when the market finally needs real liquidity to support a dip, a crash, a panic, it's not there. That's how crashes happen. Not from bad news, from no buyers. And when that day comes, the fall feels instant. Prices gap down. Liquidity evaporates. Everyone blames headlines. But the story was written months ago. It's not about what happened, it's about what stopped happening. Because price doesn't predict liquidity. Liquidity predicts price. The smartest traders don't chase candles. They listen for the silence. They watch for the moment when the market's breathing slows down. And right now, it's slowing. But don't misunderstand. A liquidity trap isn't just danger. It's also opportunity. Because after every suffocation comes a deep inhale. After every silence comes a rush of sound. Markets always reset. They can't stay frozen forever. Money needs to move. It always does. After 2008, we got a decade-long bull run. After 2020's chaos, we got another. Every trap clears the weak hands, resets leverage, and prepares for the next cycle. It's painful but necessary. That's how the system breathes. So if you're watching the markets now and thinking, why does everything feel dead? That's your clue. The silence means the next inhale is coming. But don't mistake calm for safety. Quiet markets are fragile markets. When you see low volatility and everyone gets comfortable, that's when risk is highest. Because pressure builds in silence. One day, a random piece of news, an ETF delay, a liquidation, a policy change, and suddenly, everyone runs for the exit at the same time. Not because the event was big, but because liquidity was small. That's how thin markets break. So, what do? You stop following noise. You start watching flow, not the stories, the oxygen, because money flow is the only truth that doesn't lie. Check global liquidity charts. Watch the Fed's balance sheet, reverse repo data, Bank of Japan activity. When they expand, risk breathes again. When they contract, markets tighten. This isn't about prediction. It's about awareness. If you know where the oxygen is going, you know which markets will move first. And here's the irony. Most people don't care until it's too late. They wait for panic. They trade headlines. They forget that the real danger doesn't announce itself. It disappears quietly. That's why liquidity is the most powerful force in finance, because it works in silence. It's the tide that lifts everything, or leaves everything stranded. So, when you hear nothing, when markets feel too calm, when influencers disappear and everyone's waiting for something, don't scroll past. That's your moment. That's when liquidity is shifting. And when it comes back, it won't knock politely. It'll explode. Prices will move fast, news will invent reasons, and everyone will say, no one saw this coming. But you did, because you listened when it was quiet. Every crash starts with silence, and every recovery starts there too. The key is learning to tell the difference between peace and pressure. So listen closely. The market isn't dead. It's holding its breath. And when it exhales, you'll want to be ready.